All right, everybody, this is John. Welcome to the free video. So taking a look at the S&Ps today. Kind of an interesting day. We gapped up this morning and just kind of raced higher and got a textbook sell signal right here, right as we kind of opened up against these zones here. Sold a call credit spread and really just watched for the next about 90 minutes as the market continued to grind against. And so finally ended up just kind of bailing on it. And part of the reason for this too is just the action and the ticks. So when the ticks are like they were today, and you get this action, so it's very rare when the first, and I talk about this in my book Mastering the Trade, the first hour where you're spending 90% of your time above zero. That's the kind of day you just don't want to fight it. We just haven't seen a day like that in a long time. So when that happened, then it's like, okay, fine. The next time we fall, ideally, so this is a 5-minute chart, and we've got the 21 period exponential moving average from the 30-minute chart overlaced into there. Ideally, what happens is during the day is if we can fall back to that level, that's where we want to get long. But in a day like this, where the ticks spent 90% of the first hour above zero, the idea is that you're really just focused on that 8 EMA from the 15-minute chart. So we got the 8 EMA from the 15-minute chart and then the 21 EMA from the 30-minute chart. So when we came down here, awesome, let's sell a bunch of put credit spreads and then kind of ride them into the close. So we rode those into the close, even had a call debit spread into the close, cashed them out, and then we had Google earnings and Microsoft. So I just wanted to let those happen before we get set up for tomorrow. So now we're kind of poised and ready to go for tomorrow. And then the main thing that's driving everything here, because I had some questions on this, like, oh my gosh, the news is so bad. Why is the market rallying? Well, at this point, you got to keep in mind everything here is a derivative of the U.S. dollar. The U.S. dollar last week was trading at 114. Since then, it's dropped to 111. That is very, very bullish for the markets. Just think of essentially the U.S. dollar is the most important thing on the planet, and it is. If it's strong and it's up here, that essentially means that interest rates are rising. And by that, I don't mean the Fed funds. That's what the central bank is doing. That's what I mean, like the 10-year notes, 30-year notes, et cetera, et cetera. It's representation of those interest rates rising. And in fact, if we look at TNX, these are the 10-year note rates. You can see that they actually, last week, almost hit 4.4%, and that they've now been falling. Yada, yada, yada. All that is good for stocks in the short term. I'm not necessarily looking that things are bottoming or anything like that, but that's what we want to look at. So this is the main chart I've been using to trade, and I've been getting some questions like, oh my gosh, that's pretty complicated. What do I need to look at here? Well, this is what my kids use. So it's the same thing, just stripped down to its bare essentials. And essentially what happens on something like this is that if we gap down and you get arrows, you buy it, and your target is back to this moving average here. Or my kids just like to make $100. So they're like, if they buy 50 shares, they'll make 2 points and then they get out. Then same thing here. If we're above it and you get some sell arrows, you short it, essentially back to the moving average, et cetera, et cetera. So, on a day like this, it can get a little trickier because it's like, well, geez, here was a sell signal here. But what happened is that essentially we turned, and that's fine. You can go with it and kind of continue to ride it higher, but I'm the first one to say that that's not the easiest trade in the world. And so I had a couple of people asking like, hey, on days like that, what's the best thing to do? So what I'm going to do tomorrow is, if you are a Gold Room member, after the close tomorrow, I'm going to be talking about kind of the specific ways to utilize this setup in this market. If you're not a Gold Room member, that's totally fine. We also have a free training room. And if you're a member, or if you're signed up for that, you can go in there. I'll also be in that room explaining this. And if you're not, there should be a link somewhere here in this email or at the end of this video where you can sign up. It's totally free. And then tomorrow I will be diving in and talking about this. All right, just so you can kind of understand what's happening in this current market. All right, hope it helps. You guys have a good one, and I'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.